Dear friends, good morning. I'm really pleased to be with you guys for the week currency market weekly analysis. We take into consideration the week starting the next Monday, March 15, 2021. But before to go in the next session, let's put an eye on the last week market movements to understand what happened, because it has been very interesting, the price action of the last couple of weeks. We have experienced a typical trading range price action characterized by the initial strong dollar recovery, sustained by market fear of an early rise in interest rates, as you remember, after the T-bonds auction of the previous week. The investors were really scared about that, but the central bank came in to calm the market in the last couple of days. As a first consequence, you remember last week, US stock market had fallen roughly 3.5% in a risk off mode that had generated the dollar recovery. But later on in the week, the market turned back again due to an attempt by the central bank through verbal intervention, if you remember, sudden return of risk off driven by prospect of a future rise in the cost of money. They damned that, the central bank intervening, and they stop, the fear of the market. Anyway, as you should remember, the beginning of the week, we have said that we would have been expecting a trading range price action in our market due to the balance of the two opposing forces at the time they are, joining the market. QE versus tapering, that for the time being are balancing price action. And we have been saying since a couple of weeks that would have been happen, and that's the truth, because we have seen a price action well balanced, not too much volatility, and the pair moved, according to what happened, which kind of news came out from the market. So this week ends with prices within the recalled trading range, despite the renewed short-term dollar weakness driven by the monetary authorities, which have been denying that for the time being there is an inflation danger. And a further reason that caused the dollar short-term decline was the US approval of the $1.9 fiscal stimulus package. Don't forget that, which naturally goes in the direction of providing additional liquidity to the markets, and is very good for the equity market. As you know, we are living in a paradox system, where the greater is the pandemic, and the greater liquidity is going to the market, and the equity is moving higher. So, moreover, last Thursday, the ECB moved in the same direction, and the other central bank kept a dovish approach, keeping the asset purchase at the historical level. And then, no tapering, therefore. So no way to see the central bank, coming in and rise interest rates for the time being. So central bank has been clear, and it say that if needed, they will give further liquidity to the market. The Governor Council reaffirmed there are still too many uncertainties in the market to tighten monetary policy that could affect credit conditions while pandemic is not yet been defeated. Don't forget that. So as long as we see this price action, guys, and this approach, a dovish approach by the central bank, it will be really tough for the market to see a sustained dollar recovery. But let's talk about the next week, because next week will be amazing, guys. That we will have a lot of news coming in, and a lot of perspective that could change mind investors. So next week is plenty of interesting news, but the big focus will be the central bank actions. This will be the real topics of the week. We start next Wednesday, guys, 8 p.m. Don't forget, let's stay with us. So 8 p.m. our time, Federal Reserve decision. What will the Fed do? Will Powell still be so negative about the pandemic crisis? Will he open a window above a sustained recovery given the fact that the data showing good numbers since 3-4 couple of quarters? On the other side, what Powell will he say about inflation? Will he downplay again the inflation perspective as he did in the last 3-4 meetings? It will be interesting to discovering together, guys. Let's stay together in the next couple of weeks. Thursday, guys, it will be the Bank of England's turn to act on rates, and then Friday it will be the Mr. Kuroda, the center of action, and the Bank of Japan will bring us at the end of the week. We will see there is now not much action in Bank of Japan because, you know, it seems at least 20 years that they use ZIRP, zero interest rate policy, so there will not be any kind of new news to understand and to try to figure out what will happen on dollar yen. Anyway, if the attitude of the three central bank will be still accommodating as we think, then we will have the confirmation that it takes much more time before a tapering may join the market. And maybe the first consequence of this action could be the restoring of the dollar downtrend, the medium-term dollar downtrend. We'll see, guys. We have to wait a little bit because it's not clear, because one day or the other the pandemic will be defeated and central bank will start raising rates, especially because this ample liquidity is going to create conditions to see an inflation rising. So, dear friends, central bank wants to have time before tightening liquidity, and the intermarket correlation then is going to push the buck lower as long as the equity market is still stay on the top. Since 10 years, the equity correlation with the foreign exchange market is inverse. It means that when equity moving higher, dollar is moving lower. It has been a dollar-related market, 100%. It means that when the dollar is moving higher with a pair, it's moving higher versus another pair, another currency. And this has been a mantra for 10 years. But don't forget that the classic foreign exchange market is different. The classic foreign exchange market price action is linked to the carry trades and the interest rate differential. So whenever the central banks will change their monetary policy, we will see a change in the intermarket correlation. But it's not the time for now. And we have to, stick with this idea. And even if investors are anticipating the move of central banks, and they will choose currency of the country that will move rate first in relation to how different areas will be able to defeat the pandemic. Don't forget, pandemic one day or the other will be defeated. And then what will happen to rates? Some central bank will start raising rates, other central bank will maintain ample liquidity. So this difference will create movements, huge movement on the crosses. That means the pair without the dollar. And the dollar and the market, the foreign exchange market will come back to 90s area, 90s times. That means that we will see the cross moving much more, CAD yen, Euro CAD, Euro New Zealand. And then let's try after this, macroeconomical point of view panorama to come back, guys, and check what happened in the charts, in our charts. And let's start with euro dollar, and let's try to figure out what can happen this week. I mean, we see euro dollar coming back after a test of 120, of 122.5. It came back to 118.5, and then it held very well this level, and it came back. Now we are close to some levels which are crucial. We can see some, test maybe of the resistance up there to 121.50, and that could be very interesting because it could be, come back with another distribution cycle that could bring the prices even at 116. Don't forget that in the market there are huge long euro position in CME, the future market in Chicago, or even in the spot market, which is 6-7 times bigger than the future market. About cable, we see sterling much stronger than euro, We have seen euro sterling moving lower in the last couple of let's say weeks, with the euro pound close to the low at 85.40, 85.30. We are seeing some reaction in the last hours of this week, but I mean, cable is still stronger than euro, and we can see maybe a test of higher level, and as long as it doesn't break anyway, that could be only a B wave to be followed by a C wave that could bring prices even lower to test maybe 136, 137. In the medium term perspective, then cable is still on the upside, and we may see 143.60, which has been the top we have seen in 2018. So guys, for the time being, we see a dollar related market that could affect the buck and the greenback again, as long as the central bank will keep moving in this direction. So let's stay with us, guys. Don't forget that this next week will be amazing. Thanks very much, and best regards. See you soon, guys. Have a nice trading.